Hey everyone, Raymond here. So in this video, right, I will cover a quick market update before markets open later, and share with you a potential trade that swing trade out there I'm looking at, and also a quick update on the current trades that we have, which is the Google sell put and also the RAND put call trade, right? So four things. So a quick market update. As I shared previously, the market is still holding in that trend line. So this was the resistance, and let's draw the support, quick one. All right, so you can see the market is holding quite well over here. And so let's zoom in over here. So when the market, you see these lines break down, right, it does not mean that the support is broken, but rather it means that the support is actually holding. So why got this line here is simply because the market on that day, right, or yesterday actually, it pushed down, it goes below the support, but then it come back up. So this does not mean the support is broken, but rather that the support is holding, because the support is being tested, like it goes down, but the support, like the market just push it back up, right? So sometimes the market will test. So you can see over here also, when it hit like areas where there are support or resistance, there will be this, that this line, this tail up over here. These are signs that the support is being tested, and then support actually hold. And you can see on the upside also, you see over here, like, resistance is the market try to break above, but then it holds and then it come back down, right? So my take is that, so this is what we call a bullish candle. You can call it ice cream bar or like a hammer bar, because it looks like a ice cream. All right, so so it's a bullish candle, and potentially the market might go back up, right? And so I will share this trade idea that I have later, but let's zoom in closer to a 1 hour chart, right, to look over here, right, what is happening. So if we were to zoom in closer, because we are doing a shorter, like swing trade, right, or day trade, we'll be doing a shorter time frame. So if I'm looking at 1 hour chart, usually I don't want the market close here because it will interfere with the charting. So I will use futures, right, as it will make the chart a bit more clear. So let's go in around here, right, on 4,002 range. You can see the last resistance, the market try to push above 4,002, right? So this is 4,002, but it kind of hold, right? So let's try to draw a certain trend line over here. Oops. So this is what we call like it looks like a wedge pattern now, all right? So this is support, and then of course this is the resistance, right? So again, your charts, you don't really have to draw it too well, but basically it looks something like that. All right, and you can see, so in a wedge pattern, especially even downward wedge, right? Like you can see this wedge is pointing more down than up. So usually a downward wedge pattern, usually you will break in the opposite direction, which is above. So as you can see here, as the wedge gets closer, no room anymore, right? No room, so it has to break either up or down. And usually if the wedge is pointing down, it will break up. If the wedge is pointing up, it will break down, right? But of course not 100%, but as you can see here, it plays out really nicely. So as it's broke up over here, right, potentially in the shorter time frame, it shows that the market has changed of direction, right? Potentially will be bullish at least for the next few days, right? Because markets also, if we zoom out again, markets don't exactly drop down in a straight line. It has to, over here, it has been going down for quite a while. So what happened over the last few weeks or few months, last 1 or 2 months, is you can see there's this big breakout above and then come back down. So our market is actually like going back 1 month before, and net no change, right? But what happens over here is actually traders might make money, and it also force like potentially retail investors to lose money. So the big move up, right, is kind of like to get retail investors retail traders even a bit FOMO, for them to come in closer to the top. Oh my God, I'm missing the boat, let me come in, right? Once they come in, then the market drop out to shake off the paper hands up, to read out paper hands. Of course, to shake them off out, you cannot just drop a bit, you need to, because drop a bit, buy the dip. You need to drop out more so that the fear can start to kick in, right? So it's always so market psychology is always very interesting. It's only two emotions at the extreme, right? When the market go higher, then there will be greed over here, And when the market drop, there will be fear, right? So right now, I think we are a bit more fearful. But over the short term, I feel like potentially the direction might change again. As you know, the support is holding. There's a strong support over here, and potentially market might go up, right? So the trade that I will be looking at, right? So I also shared that potentially moving forward, I just experiment out sharing a bit more, not just besides the usual option trade, which I'll be doing also, be like to further value add you guys, I'll be sharing a bit more day trade or swing trade kind, right? So just sharing some trade ideas. And for this trade idea, right, I won't say I have the highest confidence, right? So it's a low confidence trade. I think we say it's a bit higher risk. So if anyone doing the trade, please size it really small, like super small, right? So you can see the market previous low was around 3900, or let's use SPY. So if you're doing the trade, right, you can do a broad markets like SPY, QQQ, or big underlyings that correlate very strongly with the markets like Apple, right? So let's use SPY because probably you guys would use SPY instead of SPX to trade, right? So if so how does the day trade or swing trade works, right? There's a few different ways, but one is or the simplest way is you just buy long, right? So you buy the shares here, all right, and you want to ride the wave up, right? So my first profit, so if I buy here, my first profit taking will be around 400 plus a bit around here, and my first TP take profit is around here, and my second TP will be around 4001 or maybe 410 or 415 around this range, right? And my stop loss will be just below the previous low, which is yesterday, just below previous low around the 390 range. So you can set your stop like maybe 389 somewhere around here, all right? So I'm risking here, this is what my risk. So in trading, right, it's always what's the risk reward? They call it RR, risk to reward ratio. So I'm risking maybe 396 to 389 around here to potentially make over here, right? And potentially, right, if the market shows bullish momentum, I can convert this day trade to a swing trade. Swing trade meaning like it's a longer term, potentially 4 or 5 days or maybe 1-2 weeks, right, to ride the whole wave back up again, right? So this is a trade idea, just a trade idea. I might do it, I might not. It's not, I would say it's not I don't have the strongest confidence in it, right? So, but I'm just sharing any ideas that come to mind. A more conservative variation of this trade that I just shared would be you don't enter the long over here. You wait for if there's a setup, that means you wait if the market pull back first before going back up, right? Then you enter maybe around here. So if the market pull back down here and you enter here, then your risk is firstly lower because you enter here and then your stop loss is still the same, below 390. Then you're risking lesser. And if you enter here, the reward is higher by a bit, right? So you reduce your risk, but your reward is stretched. So your RR, risk to reward, is slightly better. So this will be a more conservative play. But of course, the downside of this conservativeness is maybe the market don't have that pullback and it just shoot back up, right? So then you might say, oh yeah, I missed the boat. So there's no right or wrong, right? It's just a day trade idea. And again, those of you who are not familiar with like short-term trading, I do suggest you maybe just skip it, just observe or just try for the experience of it, just to get used to it also before you do real money, so you can try on paper money also. Right, so this is just a trade idea, just sharing, right? So let me know your feedback if you like this kind of trade ideas kind of thing, and in future any ideas that I have, I can just share. All right. Now moving to our current trade, right? So we have two trades which